Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday, the 5th of April, 2021. And happy Easter Monday to all of you who commemorate the death and resurrection of Jesus Christ. Now, in our Gold and Silver Weekly Update, which was published last Saturday, and we put a link below if you haven't had an opportunity to listen to it, we pointed out that we could expect to see some gold and silver price reaction to the excellent non-farm payroll report announced last Friday, and we should expect a reaction early this week. But because it is a bank holiday in the UK and parts of Europe, we will have to at least wait until Tuesday, particularly when these markets, and especially the London market and the London bullion market, reopens. Early signs, though, are a weakness in both gold and silver prices. On Friday, gold closed at $1,730, and currently, as at 14:45 GMT, it is down $7 at $1,723. And silver, having closed at $24.99 on Friday, is down 13 cents today at $24.86, having actually recovered from being as low as $24.63. Now, of course, these prices may change by the end of the day or by the time this video is published, but tomorrow we should see a more significant reaction in one direction or the other. Interestingly, though, Bitcoin is a little changed today so far. Now, although the UK and many European markets are closed, the US is not. And equity markets here are currently up, and strongly so. The Dow is up some 277 points or 0.8%. The S&P 500 is up 29 points or 0.7%, and the Nasdaq Composite is up 134 points or 1%. Now, Bloomberg published just a few minutes ago, and we'll just quote them, it's a relatively short quote, "Stocks rose towards another record as Friday's unexpectedly strong jobs report bolstered confidence in the economic recovery. The S&P 500 extended gains into a third session, led by retailers and industrial shares. Tesla Inc.'s blowout delivery numbers spurred a rally in electric vehicle companies. GameStop Corp, poster child for Redditors looking to squeeze short sellers earlier this year, tumbled after saying it may sell up to $1 billion worth of additional shares. Treasuries and the dollar were little changed. Data on Friday showed US employers added the most jobs in 7 months, with improvement across most industries in March as more vacations and fewer business restrictions supercharged the labour market recovery. Biden administration is trying to build public support for a $2.25 trillion infrastructure plan, targeting Republican voters in an attempt to counter opposition from lawmakers. While Sunday's news indicated there may be some support for a much smaller spending package, the issue of increased taxes remain the main sticking point. Despite the gains in stocks in recent days, speculators have been pulling back their bets for lower volatility. Net short non-commercial positions in CBOE, that's CBOE, volatility index futures have shrunk for 6 straight weeks to their lowest level since the beginning of December. The US equity volatility benchmark fell to its lowest in over a year on Thursday as the S&P 500 closed at a record high. End of quote. Briefly looking, the dollar index, though, is slightly down at the moment, in fact by 0.22 points, and is currently below the 93 level, which it was above last Friday, and it is at the moment 92.80. Gold futures are edging lower currently, but with low volume due to the extended Easter holiday in Asia and Europe, we shouldn't be too surprised at this for the moment. Now, we have and were expecting certain US data to be published by now, but it looks as if we're producing this video a little too early, or the data is being announced a little later than envisaged. We have, in fact, 3 quite important pieces of US economic news being published today, namely the Market Services PMI for March, the ISM Services Index for March, and factory orders for February. We're certainly expecting the services PMIs to show an improvement on the previous month, but reserving judgment a little for the February factory order figures, though we are expecting the March ones to be considerably better. Now, Reuters, literally while we've been producing this, have just published the following, which may give us an indication on what to expect tomorrow. We'll quote them. The S&P 500 and the Dow hit record highs on Monday as investors cheered strong jobs data and looked for a report on the services sector, with signals that 2021 could see the best annual economic growth in nearly 4 decades. An ISM survey for March is likely to show a jump in activity in the services sector, which accounts for more than 2/3 of US economic activity. The data is due at 10 a.m. ET or 1400 GMT. But we've passed that. The domestically focused small-cap Russell 2000 index rose 0.6%, as Friday's report showed US non-farm payrolls surged by 916,000 jobs in March, well above 647,000 forecast by a Reuters poll of economists. If you had said a year ago that we would be where we are now, no one would have believed you, said Thomas Hayes, chairman of Great Hill Capital LLC, New York. On the other hand, you have concerns about potential interest rate rises sooner than promised. At the same time, there is starting to be a little understanding that perhaps earnings estimates are too low. 10 of the 11 major S&P sectors rose, with consumer discretionary, industrials, financials, and communication services leading gains. Energy dropped, tracking a fall in oil prices as producers decided to increase output. With speedy vaccinations and additional government stimulus helping the S&P 500 and the Dow clinch all-time highs, investors will now look to progress on a massive infrastructure plan and the upcoming corporate earnings season for insight on the sustainability of the rally. The Nasdaq is still about 5% below its record peak from February as high-growth tech stocks attempted to recover from a pullback after a spike in bond yields. At 9:42 a.m. ET, the Dow Jones Industrial Average was up 303, the S&P 500 was up 34, and the Nasdaq Composite was up 110. U.S. Treasury Secretary Janet Yellen on Monday will call for a global minimum corporate tax rate in a speech to the Chicago Council on Global Affairs, according to a report by news website Axios. Tesla Inc. shares surged 6% after the world's most valuable automaker posted record deliveries. GameStop's corp shares tumbled 13% after the video game retailer said it may sell up to $1 billion worth of stock as it takes full advantage of a dizzying rally in its shares this year on the back of a Reddit-driven retail trading frenzy. Advancing issues outnumbered decliners by 2.64 to 1 ratio on the New York Stock Exchange and a 1.87 to 1 ratio on the Nasdaq. The S&P index recorded 63 new 52-week highs and no new lows, while the Nasdaq recorded 97 new highs and 2 new lows. End of article. So, market expectations are positive for economic recovery, and as the vaccine program continues apace, then we can expect to see the global economy seriously begin to recover. We are expecting further rises in equity markets, though we ourselves are not particularly major investors in these currently, as we still believe they are somewhat heady or in certain sectors, and are willing to miss out on up to what we perceive to be a potential 10% gain or so from current levels when weighing the risks against a more than likely mid-term correction. Though, of course, if the 2.25 trillion stimulus package is actually achieved, then markets may continue a little further for a little longer. We shall see how the economic data pans out later on today, and we'll watch the political news quite carefully for any unexpected announcements. We shall, of course, be commenting more tomorrow once we've had an opportunity to see the market's reaction to Friday's job figures when the UK and Europe reopens again. Thank you so much for listening. If you haven't done so, please subscribe to our channel. not forgetting to press the bell sign so of course you're notified of our videos as and when they're published. And if you have any comments to make about what we've covered so far today and what you perhaps envisage may be happening in the next few days, then please share them. We read all comments. Don't always comment on them ourselves. Forgive us for that. Time prevents us from doing so, but rest assured they are all monitored. Thank you once again. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.